Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Connon.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Hope everyone had a good weekend. Welcome to this Monday edition of Benzinga's PreMarket Prep. I'm Spencer Israel, here with Joel O'Connor and Dennis Dick. The news of this morning is in biotech land, Gilead getting together and buying Kite Pharmaceuticals. So we're going to talk about that big deal and what it means for the rest of the sector, because it is driving up a lot of biotech stocks so far this morning, and we expect maybe it will as the morning continues. So we've got that merger or that buyout on our radar, and we're going to recap Friday's trading action and talk through some other movers in the market. Our guest today will be Adam Sarhan. He is the founder of 50 Park Investments and Sarhan Capital. Joel, how's it doing in the markets today?
We've had a nice range in the overnight session. We got a buck below Friday's low at 37.5, 36 and a quarter, and knocking on the door here, the pre-market high 45 even. That's a great number. We know where our resistance is, and that's the triple top from last week at the 2354 area. Crude not doing much, up a penny here, so we'll keep see if we can get some movement in the crude market. Gold and silver are in the green. You have gold over that magical $1,300 level, trading up 480 at 1302.70. It's silver back above 17 here, up 17 cents at 1721. S&P's ticking at the highs of the session here. Dennis, I'm going to bring up the Kite Pharma chart here, and I want to know if you got the memo a couple months ago that this stock was going to be going on a roll. Look at the price.
I should have got it, eh?
Look at this.
I'm a Gilead shareholder. I should have got that memo.
I
know it's been on fire, but I mean, you can't say that really, because all of the smaller biotech stocks have really been on fire. I mean, biotech, and Kite Pharma's have just been a monster here. You're right. They look at it from 80 to 140 here. Now it gets taken out this morning here at $180. So is this cash deal, Spencer?
This is an all-cash deal. $180 per share comes out to $11.9 billion in cash.
I mean, Gilead has been looking for growth. Gilead has, it's no secret that this company has been looking to buy somebody. They got a lot of cash, not a lot of growth. They knew this was probably going to happen here. Kite Pharma it was a candidate. And Kite Pharma, obviously, shareholders benefiting big time here this morning. I'm a Gilead shareholder. I feel like they paid too much. I know it's only $11 billion, on a company. What's Gilead's market cap? Do you have that in front of you, Spencer? Throw you under the bus here. Use that pro. Give us the Gilead market cap.
Let me pull it up in 2
just to get
seconds.
A feel for how big a company is this. It's
$96.36 billion.
So it's significant. I mean, it's a significant portion. But Gilead, has been struggling ever since they cured Hep C, and they've been looking for growth. And, here they get a company that they're getting some growth from, but I'm just scared of that premium they're paying. Wow.
I mean, it's hard to put a big emphasis on the earnings, but the most that Kite has ever earned is $12.3 million. They earned $10 million last quarter. That's not the right reason they're buying this company. They're obviously buying it for growth here, and they are paying up for it. I just want to talk about the price. Two things. First of all, I want to talk about overnight exposure, Dennis, and we know you take a lot of positions in the market, long and short, trying to be delta neutral. The first thing when I saw Kite here, I'm like, oh man, I hope Dennis doesn't have some odd lot crazy spread on where he's short.
You know what? I've learned the hard way over my years. I do a lot of overnight trading. When I do day trading and overnight trading, I very seldom do the smaller biotech stocks for this reason, because there's too much random news. Random drug news comes out, mergers, just the worst story if you just had this overnight short. Obviously, if you're overnight long, you're happy about it. But I mean, it's just so much random news in the sector. That's why I've always been very cautious when I'm buying any or shorting any biotech just for an overnight technical trade. Just too much random news.
No way to hedge. no way to hedge.
No, there's no way to hedge.
No way to hedge.
There's no way to hedge this stuff, really. I mean, you could say, oh, well, you could put Kite Juno on or something. Help a bet here this morning because you see Juno trading up in sympathy, and they do move together. But same time, man, like if there's random drug news in a stock and you are short that stock and it's good news, you're buried. So just the hard way, I trade the big guns, because Gilead, that would be a stock I would hold overnight, not be scared. The Mercks and the Pfizers and the Lillys, I mean, if they have random drug news, it only usually moves the stock a couple of percent max. You get some of these smaller biotechs random drug news, this stock could go up 50%. Yeah. So that's, you just got to be somewhat cautious when you're holding stuff overnight. You got to know what, as a potential for random news. Obviously, anybody holding this overnight is pretty happy here this morning, but there's no way to know when a merger is going to happen, or, you can speculate that, Gilead's going to eventually buy, something, and maybe Kite's going to be a candidate, but they've been talking about Gilead buying growth for years.
Yeah, and I sat down this morning when I got in and talked to Luke, and he told me, about the merger, and I'm like, oh, well, Kite, I go, what's Gilead doing? He goes, it's trading up $2.50, and I'm like, wow, another case of the acquirer getting a lot of love here. And I said, I wonder if Dennis is out there shorting it.
I would have been. And I slept in today, and I actually looked at my cell phone. I saw it up $1.50. I was like, I'm going up to log in. By the time I logged in upstairs, it would already given back some of it here. So, I'm looking at it. It's popped to 74.50 here right now. I still own this along my investment portfolio, but I'm almost thinking of ringing the register on it. I just think they paid too much.
76.73, that is your pre-market high. And boy, that just coincides. Not the exact tick that when you talk about the levels, but close enough. Horseshoes and hand grenades here. 76.36 was your high on August 1st. And then July 31st, your high was 76.49. So right into that double top was too much gusto for some of the longs here, and they've knocked it down. I always like to keep an eye on the closing price of an issue the day prior to a big move, and that would be for Gilead. That'd be 73.79. So I'm just not making a big move on it today. If the street thinks it's good, it's going to be holding 73.79 for a while. If they think it's going to be, not accretive to earnings for a long time, and it's going to be a rough transition, then you'll see some lower prices here in GILD.
Yeah, it's hard to say. The interpretation on it has been okay so far. I mean, I think it got ridiculous when it went over 76. I think because the premium they paid was too much. Like I kind of vomited a little bit in my mouth when I read this morning the premium they were paying because I own shares of Gilead. And then I checked and I was like, it's up $2 on that. I'm like, man, that seems mispriced to me. But we'll see what happens. The difference, the market wanted Gilead to do something, and they did it. So the market's rewarding a little bit here this morning. I think when the real money comes on 9:30, though, I wouldn't be surprised if Gilead actually did trade into the red. I don't know what I'm going to do with my stock, if I'm going to stick with it or not through this. It's one that was a value trap for me. They're trying to get a little bit of growth, so that's going to help them. But I don't know. It's just so much premium. It just that's my reason for maybe selling it.
All right, Juno. Juno, you want to talk about Juno here?
Yeah, there's going to be some sympathy moves here. I mean, when I think Kite, I think Juno right away. Juno's been popping the last 3 or 4 days. It's a stock that's been on my radar too, just looking at it. You're significantly off the highs in Juno. Back in 2015, we're up at $69 on this stock. It's trading at 30, and now it gets a 5-point lift off the sympathy because obviously if Kite's getting bought, maybe somebody's going to sniff around in Juno as well. It's a big sympathy move, though. 14%. Wow. 35.08 this morning. That's a big sympathy move. I'm not sure I'm coming in here chasing it up that much, in sympathy.
Takes out the recent high of the move. The recent high of the move, way above that, 31.73. We're trading up 4.34. I guess with this one, you just want to keep an eye on the $35 level. That was your high back in in August of 2016. So it holds 35, and there is some interest here, but this is just getting bid up. Another company being taken over. So I think if it doesn't hold 35, I'm holding this long. There's really nothing much to lean on until you get into yesterday's range.
Yeah, I think I'm a fader of the Juno rally as well here. Not long term. I don't know long term, but short term here, I think it could be a little bit overdone being a 14% sympathy move. It's a big sympathy move. Our chat's on fire here this morning. We were talking sympathy plays in the pre-market show. I guess we should have just asked the chat because they're coming up with all the same stocks we did. Bluebird Bio, BLUE, up 10% almost in sympathy here as well. Get another one that's been beat up. I mean, you go out to the weeklies really, and it's off. The all-time high on Bluebird Bio is way up $197. So, and then we got killed 2015. We know the biotech bubble burst, and obviously 2016, it's got down to $35. Well, it's been climbing. It's getting a nice lift here this morning, trading up almost 10 points with the breakout. And they're just speculating that, hey, these are growth biotech stocks. If Gilead is buying, maybe some other big companies, big biotechs might be interested in buying some of these growth ones as well. I mean, the market cap on Bluebird Bio is only $4 billion. And the market's just basically saying, hey, that's a drop in the bucket. If anybody wants to buy growth, you can even look at something like, Biogen's market cap is 60 billion. We know Gilead's up at like $90 billion. If you look at Celgene here, I'm just looking at the other, big biotech players, $101 billion market cap. I mean, these would be fairly small acquisition for any of those companies there. But Bluebird Bio, I don't know if there's going to be more mergers coming in here, but that's what the market is speculating when they see these stocks getting bid up 10% this morning.
And Dennis, just to kind of give you a rule of thumb, when we were combing the ditches here for sympathy plays and looking at different stocks, what did you use? Like the three or
I was looking, anything that's under, anything in the $5 billion range, but anything under 10 billion that's got pretty good growth. Those are ones that could move in sympathy here today, with this purchase, because you can't think like big companies, like, nobody's coming and buying Amgen, nobody's coming and buying the big guns. Those are the ones that would possibly do the acquiring. So, if you're looking at sympathy, the Bluebird jumps right out at you for sure. If you're looking at sympathy, Juno obviously jumps out at you, that one as well. You said another one, ZIOP. We say Z in Canada, ZIOP for all my Canadian listeners. It's up 8% here this morning. So these are stocks that they're speculating. What's the market cap on ZIOP? I'll just go grab it for you here
it's
right now.
$810 million.
Yeah, you're talking. This is a drop in the bucket here too for any of these companies. Maybe Gilead isn't done. The market doesn't know, but it might kick off. It's kickstarting a rally in a lot of these growth biotech companies that have stalled. ZIOP, if you look at the chart on that one, it's ugly, really. If you go to the monthlies, stock got up to $15 back in 2015, $14.93. It's $5 now. Now it's $6. So they've come off significantly here. A lot of these companies are smaller. A lot of these companies don't make money here yet, but they do have the potential for growth. And that is why they're getting bid up this morning, because that's what you're looking at, is that, there might be some other buyers out there for some of these smaller companies.
What about Sarepta? SRPT.
I could see Sarepta getting bid up on this morning. It is. Okay, it is $37. So it's bid up 1.5%. It's not one that just jumps out at me and I think, whoa, but yeah, the Sarepta chart doesn't even look that bad here either. Yeah, the gap up, and I'm not sure if that was drug news or what that was on when it went from 36 to 44. I think it was the earnings report, actually. It's come all the way back down and filled that gap, and it's right there. I don't mind that set up on Sarepta whatsoever. I wish I would have saw this Friday. Filling that gap.
It didn't really fill the gap, though. Dennis, let's talk about this. It really didn't fill it, because is that good enough for you on Sarepta? Because it gapped up. The day that it gapped up was
2 days before was 36. I mean, you got to talk about what, so, you can get technical and say, okay, on the day that it gapped up, it did not actually fill that gap because it was 34.53 the low, and it only got down to 35.26. So Joel's going to talk about an $8 gap and go and say it didn't fill the last 50 cents, so it didn't fill the gap.
No, I'm not.
He's being fussy here.
I
say that I look at that, and, the charts aren't perfect. That filled the gap. In my opinion, that filled the gap.
I like Sarepta. I like it coming back down to the
I like it here too. So
you're out.
You're arguing with me. I'm trying to give a bullish stance on it. You're arguing with me on a Monday morning that didn't fill the gap, and you're going to get bullish anyways.
I'll go back in the corner here. All right. Welcome to Benzinga's Pre-Market Prep Biotech Show at 8:15 here. Let's
well, we're going to talk this morning, and another good point being brought up in the chat is obviously you think about ETFs, who has the most exposure to something like Kite. Spinner is saying 3% of XBI is Kite. So you can just do quickly and say, okay, well, I can do the quick math on that. If Kite is trading up 30% or 28%, well, if you take 3% of that, you're at almost 0.8, 0.9% of the XBI move is Kite. So it's up 1.59%. So it's saying the other biotechs, and all that their holdings might go up next 0.6% in sympathy here. So that's not bad, so think about that too. I think that's fairly price one, maybe even on the cheap side. But XBI, let's do the technicals on that one, Joel, because it does hold 3% of Kite.
All right, good call there. From our chat is just on fire today with ideas. That's why we pay them the big money. 79.13. That is your pre-market high. Let's go to the daily charts. Ooh, look just under 80 there, Dennis. That could be a potential target here. Had a couple tops in the XBI just under $80, and that was at 79.81 and 79.94. That was back at the end of July, so not out of the range of possibility, but that would be another buck move. You'd have just, if you're going to trade this thing, just get all those top components up there on your screen. And obviously Kites looks like it's going to be holding right around 180, but, see if they hold their bids, because the opening print, if they're going to bid them up, they'll take them up and they'll take the index with it. If in fact you come down below that opening print, there could be some downside action.
Jumping over here just to a couple other stocks that I was going to talk about here. I want to do the technicals here on you didn't give us technicals on Bluebird Bio, BLUE, and it is getting bid up 10% here in sympathy. It's one of the ones you think about right away. Are you somewhat concerned here? Is this too much too fast as well? What are your thoughts?
Yeah, it's just going on. If I'll tell you right now, if I was on this thing, I'd be rigging the register.
I would too.
Or at least half of the position. If you catch an overnight sympathy move like this, you take off half and then see what happens. Trading at 107.50, really not moving a lot. Let's go to the dailies here. And I see a double.
They got bid up right away and it's just kind of holding up there.
Yeah. You need to go to some longer term charts here because Kite had that, not Kite, excuse me, because Bluebird has been in the rally mode. You want to hold out for 110, or do you want to look at the triple top just under 108? So that'd be.
But let's put this in perspective. You got the one that's getting taken over is up 28%. It's that's like a perfect scenario where your stock gets taken over and it gets a 28% premium. You got Bluebird Bio, no news at all, trading up 10%. You have Juno trading up 15% on no news at all. Well, if it got taken over, it was only going to be an extra probably 13 or 14%. If you're saying you're going to get a 30% premium, the price and a half of it, there doesn't even any news on it. It seems absolutely ridiculous for these things to be up that much in sympathy. I appreciate a sympathy move, but when I think they're going to have a sympathy move, I think they're going to go 5-6%, not 15. Juno seems way overdone to me. I don't know. Maybe I'm wrong. These things can get wild.
Elgos,
and, maybe it's going to get hot. All of a sudden, it is a smaller company, so they can do some wild things. It just seems, I'm not coming in here and saying short these pops here. I'm just saying I'm not buying it up 15%.
Triple top at the 108 area, you can't ignore that. So if it gets there and gets above there, okay, we're good to go. But if not, you look at 108, 107.85, and 107.75. But that is, what about the algos? The algos are now fine-tuned to this, right? And we'll see how long.
They are.
Yep. So let's see how long they can keep the bid there. But out of all these things I'm seeing, out of all the levels and resistance, this 108 area in Bluebird is really important to me.
What about CLLS? There's another one I was thinking of. Selectus, which is trading up 7% here this morning. That could move too. It's already it's an ADR too, so that's a consideration. It's already kind of getting priced in here because it is an ADR already trading. But there's another one for you. There's I could think there's just a ton. just go to your scanner and scan for growth biotech that's under $5 billion in market cap. You come up with a lot of stocks. So I'd be careful shorting any of that stuff today.
27 even. You had a couple highs there in CLLS, and then just above 28 at 28.50, you put in a hard top there with 4 consecutive highs.
All right. There is other news besides biotech stocks. We just spent 20 minutes on them. You wanted to give a few highlights from Barron's here because Barron's was highlighting a lot of stocks over the weekend. We know Barron's moves price. What was Barron's saying?
Oh, man. I've never have written down so many stocks from a Barron's magazine. They just kept
What's on the cover?
New space race. And
the news, like in the news,
like new space race as far as Elon Musk, having colonies in Mars and stuff like that.
Okay.
Yeah. So there's
what companies do they think are going to benefit from that?
Well, I'm just going to give you the safer plays that they talked about. And they talked about, well, you can always look at the chart of Boeing and Lockheed Martin is that, they're going to be tied, whatever the government's going to be doing out there in space, they're going to be closely tied to it. Another company they mentioned was VSAT. So those are the conservative ones that will benefit from the military spending more money in it. The other ones were some private companies. They talked about all the money Bezos was spending. They talked about, Elon Musk's dream for, SpaceX and whatnot. So covered a lot of private companies. The other two things I want to bring attention to is David Rocker wrote a compelling short article on Tesla. And I know we don't need any Tesla bear news to get us leaning that way, except for Gene Munster. But read that article if you get a chance, because they talked about, how being first isn't like always the best in industries. And at the end of his article, he equated Tesla, or he didn't equate it. He mentioned Atari, AOL, BlackBerry, Napster, Netscape, and Palm.
Why? That's a crazy comparison. Why did he mention those companies in that
vein? Because Dennis, are you still using your Palm Pilot? No, they just talked about, if you think about it, Palm Pilot, right? That came out like the whole handheld thing. And look, where did that, I think they got bought by Cisco, didn't it? Who ended up buying Palm Pilot? But just, they start out with,
I don't know if it got bought or if it
they did. They got bought. They did. Google that.
It didn't get bought for much premium though, because it was the hottest thing ever in the tech bubble. And then everybody else came out and basically copied their technology and made it better. And then Palm Pilot, I remember it fallen and fallen and fallen. If we could find a historic chart of it, I think that if I'm remembering that takeout, if it did get taken out, was very low. So way off of its all-time highs, because everybody just came out and copied their technology.
And that's exactly what he's saying. AOL was the first one. These other companies were the first ones with technology, but that doesn't necessarily mean that they capitalize it. And then he went into the whole argument, that we've tried to use before about the car production and how much they're making per car. But, it's just an interesting article, caught my eye. And then the last one that I'll bring up here, and Interactive Brokers, IBKR, Steven Sears talked about that and how they're getting into banking services and how people have a lot of money in their brokerage accounts and, they don't necessarily use it. And if you've been betting against Thomas Petterfly, over any course of time, you ended up losing money. But they're getting in. They already have a debit card. They're going to be moving into any banking services. So doesn't make me necessarily want to short anything in the
What a monster stock Interactive Brokers has been.
Yep.
This was $15 back in 2013. It's now $42. You go back further than that. It was higher back before the financial crisis, but stock's been on fire too.
All right. Maybe we can get to a few of the other.
What about PayPal? Did you see that article?
PayPal?
No, what they say on PayPal?
Yeah, PayPal could rise another 16%. The bottom line, I'll just read straight from the article. The bottom line, since its spin-off from eBay 2 years ago, PayPal has seen its shares now trading at $60 rise 64%. The addition of new partners, new EU payments regulations, and attempts to apply its Venmo app to e-commerce could lift the stock 16% to $70 in the next 12 months.
I had PayPal in my investment account for a long time, and I sold it back last year around $40 because I thought valuation was getting a little bit stretched. I was dead wrong. Valuation has continued to obviously go up here, and it's up at $60 here now. So kicking myself for selling PayPal out of my investment account, because I had it in there. I had it from eBay. Like I had eBay years ago. I bought eBay during the financial crisis. And then it spun me off PayPal, and I had eBay and PayPal, and it was a huge winner for me because I bought it in the financial crisis when eBay was like $11. Then they gave me shares of PayPal. I still have my shares of eBay. I was up on a ton of it. I've sold both stocks now just because I thought valuation was stretched in both, and both have continued to rise. My eBay, I think I sold around 29, It's up at 34. My PayPal, I sold 40. It's up at 60. I guess I just can't sell in this market.
I just wanted to mention too, before we move on here, there's a little thing about Amazon and how they're going to roll Canadian Tire, but that's CTC. That's a Canadian symbol. But all the Barron's moves that I've seen in all the years I've been reading and watching the markets, these moves in VERI last week, Dennis, that has to have had the biggest impact that I've ever seen. Came out last week. Stock.
Give us a symbol again, Joel. Just
VERI, VE,
okay.
VeritoneInc.com. Ended last week at 776 and IPO'd at a higher price, 1564. Came all the way down. Barron's had a quote in there from its CEO that they have some AI technology that even Google and Facebook doesn't have. And that thing caught a bid on Monday, gave a little back on Tuesday, and now it's right back at its IPO high area at 1564. Failed just under that level on Friday and back at 1380. But boy, what a move. I mean, that's a lower cap stock. You can move it opposed to some of these other ones we're talking about. But
get these violent moves sometimes to the upside after, a stock is crawling down. I think you catch a few people shorted as well. So it's not out of character that sometimes you see some really violent moves. I mean, even on big caps, think about the Verizon violent move after it had been sold off and April, May, June, July, everybody hated Verizon, and then boom, it blasts off into orbit. Goes from $42 to 50. This is 20% move in a stock that usually moves $1 a month. It's moved $8 or $7 in a matter of 3 weeks. Sometimes you get some violent moves and stocks are drifting down, even on big caps.
Yep. Once you get a catalyst there, I've been keeping an eye on this Verizon, waiting there for it to come back down. But got it a few times near the $49 area. But anytime you think it was going to get into anywhere near that gap area, it's really been holding a nice bid. And I think AT&T has backed off a little bit. Yeah, AT&T's backed off a little bit more. Maybe that's the one I should have been shorting. But anyways,
Spinner bringing up something that we haven't talked about yet too. What about the hurricane? I mean, horrible in Houston. I was 50 inches of rain. I couldn't even believe it. I was looking at those pictures. Did you just see the ones with the old ladies in the retirement home?
Yep, they got.
And they're all sitting underwater. They weren't rescued. I'm like, what's going on?
Well, they got.
These ladies are literally sitting in a wheelchair and she's underwater right now. That's the craziest thing I've ever seen.
Well, they got rescued. I just want to put that.
Well, I would hope they got rescued after the picture went out there, but what about the people that didn't get a picture sent of them?
Yeah,
is there other people that are sitting in a retirement home in a wheelchair underwater? That is horrible.
Yeah, I mean, Houston is from what I was reading. Houston relies more on bayous for drainage than New Orleans does. It's like the real bayou city, and when those can't handle drainage, the city just gets backed up.
It was horrible. That's horrible to see. So, obviously, we got to talk about impacts here on the market. Spinner bringing up, what about the insurers? Look at Met, and they are all trading down, Spinner. So good point here. MET is trading down 1% in the pre-market. Travelers Corp is offered down in the pre-market at 126.25. It hasn't traded yet, but the best bid is way down at 120. Also, AIG, bigger diversified company. I don't think AIG get hit as much as maybe the other two, but AIG is down right now in the pre-market here as well. I mean, this was worse than expected. Wasn't it? I'd say this is worse than expected.
So I think what's happening now, it's kind of why I came in today thinking about infrastructure, is because the storms are bad, but the infrastructure is making it worse. So that's what happened with Katrina, right? Katrina was a bad storm, but the horrific infrastructure in New Orleans made that worse than it maybe could have been. Same thing happened here, I think. It's just a general not good infrastructure anywhere. We're just not prepared for storms like this. So when they do happen, it just gets magnified. So that's why I'm gonna have my eye on infrastructure, going forward for this reason, is because I saw someone say that this was a 1 in 100-year storm, but they said that about Hurricane Sandy, and they said that about Katrina too, and that those are all happening in the last 12 years. So if 1 in 100-year storms are happening every couple of years, then they're not 1 in 100 years. They're 1 in every couple of years.
Are we going to blame global warming?
I don't know.
What's global warming?
I'm not that smart. I just know that
no such thing.
Infrastructure is on my radar right now.
Yeah. And bringing up a good point in the chat, John Dotson. Look at Home Depot and Lowe's this morning. Both of those stocks getting nice lifts here. I mean, there's going to be some major construction's going to have to happen in Houston here now. So Home Depot and Lowe's going to probably benefit short term from this here. So not everybody's going to get hit off of this. Home Depot and Lowe's trading up over 1% each. Big companies getting a lift from a hurricane.
Dennis, have you been running your GNRC algo lately? Generic?
It's up too. Yeah, generic. It's been moving. GNRC. It's a great point, Joel. Look at the stock of this one. It's blast off in orbit 2 days ahead of this hurricane. It was down $37. Now you got the generator obviously trading up over 39. It was in the pre-market here. It's lifted too. Historically, what usually happens with GNRC, it usually runs up ahead of the hurricane and usually sells off after. This one was pretty bad though, so I'm not sure if that's going to hold here or not, but that's what happens historically.
Big level to keep an eye on, above $39, only 30 cents from where we're trading. You had a double top at $39.11 and $39.28. This was back on August 7th and August 8th. So continued move through that area. You can't ignore that double top, just over $39. Pre-market trading, you got a little bit above that, but I still consider it a very relevant level as you hit $39.35, and that must have been like, well, on one platform I have $39.35. On another platform I have $39.58. But I have a feeling that $39.58 just
that was off exchange. So maybe your other platform, the $39.58 print I can see right at 801. That was off exchange. So not sure. That's obviously not within the market sometimes. Sometimes those funny things can happen. Sometimes it may be late prints. There's a lot of different reasons for those. They need to get more. The problem is when you have something off exchange, you just see FINRA tear up. So you don't know, okay, was this a cross? Was this, something late reported? There needs to get more transparency in what's coming from the tape on FINRA. So we can't even, totally speculate on exactly what that was. But 39.58 did trade 300 up on FINRA. And sometimes it can be just an off-exchange market maker. If the quote all of a sudden goes 39.58 offer, somebody puts in an order, they can actually match the price way up at the offer. I think it's crooked, but that's what they can do. So it could be a retail trader even just sending a market order and then getting filled way up at the top because the offer was up there for a second. But 39.58, it was on the tape at 801. So
nice thing about our chat, we got people from all over. We have Texas Linda in here, and Linda, I hope you're doing okay and in or near the Houston area. She said no. Record 500-year rain in Houston.
It's 50 inches of rain. I don't know if that's have we had 50 inches of rain anywhere in the U.S. ever?
What?
It's like 4 feet, over 4 feet of rain. When we had our great flood in Tecumseh, Ontario, I think the rainfall was like 10 inches. This is 50. This is unbelievable.
More rain in 1 week in Houston than they've had in the past 10 years in Arizona.
Probably true. That's unbelievable amount of rain. 50 inches. I was like, that's got to be a typo or something. Then you look at the pictures, like, whoa, that is not a typo. 50 inches. That's incredible, and I feel so sorry for everybody who's in that city. And obviously, those pictures of those people in the retirement home just awful.
Yeah, that's our thoughts and prayers to everybody out there. Hope we get a speedy recovery. Trump will be down there tomorrow, so everything will probably get cleaned up in a heartbeat. And little sarcasm there. 833, Dennis, an imbalanced look.
Square, every day Square's got a buy and balance. Same thing again. SQ 40,000 to buy here. I'm trying to really figure out themes here this morning. I mean, we're up a little bit on the S&P futures, but I'm not seeing anything really jump out at me. Obviously, biotech is going to be a short source of strength, especially the smaller ones. I'm seeing most of your biotech stocks are actually bid up here this morning. Even some of your bigger pharma is actually starting to try to catch a little bit of a bid. For instance, Pfizer here is trading up. It just traded up at 33.64. That's almost up 1%. I don't know if that's going to go up that high because, you don't think about Pfizer, Merck, and Lilly benefiting from because Kite Bio, that, doesn't really make sense to me. If those all get bid up on it too, I don't know if they're going to come in and buy every drug stock because, Kite got bought. I think you'd stick with those smaller ones is probably the ones where the money is going to fly into if it hasn't already. But just looking back to imbalances, Alibaba, look at this, 60,000 to sell in Alibaba. That's the first day in a long time we've seen a sell imbalance in BABA. Despite that, stock is still trading up here in the pre-market, so somebody thinks it might flip the buy. Twitter, 65,000 to sell. Let's go give you the snap. I always like to look at the SNAP imbalance. Only 15,000 this morning, so it's pretty small here yet. Home Depot buy imbalance of 38,000 shares. Not surprising with the effects on Katrina. 28,000 to buy and lows. Both those stocks going to trade higher here. Or I said Katrina, but I meant what the? Now I forget the name of the
Harvey. Yep.
Who names these things? Who's the person that names
National Weather Service?
And they just go like boy, girl, name, and they just go in alphabetical order, right? That's how it's done.
I think, they ran out of girls' names. I have an Uncle Harvey. I wonder what he thinks about the storm being named after him. But 8:35, Spencer, we got a guest coming up, right?
Yep, Adam Sarhan. He's the founder and CEO of Sarhan Capital and 50 Park Capital. He can talk about pretty much anything. So we'll be on with Adam in a moment, and we'll be right back, folks.
Welcome back, traders and investors, to Benzinga's Pre-Market Prep. I'm your co-host, Joel Elconin, along with Dennis Dick and Spencer Israel working the boards. And we are joined by Adam Sarhan. He's the founder and CEO of Sarhan Capital and 50 Park Capital. Adam, how you doing on this Monday morning?
Excellent. How are you guys doing?
We're doing good. We're all settling in. Spencer got back from his vacation at Myrtle Beach and is working hard here. But, we talk a lot about individual stocks on the show. We talk about trends. We talk about sectors. And we also like a good macro look every once in a while. So as the market's residing up here, really, you can call it all-time highs, if you want to skin a cat. Give us your assessment of the market trading within a couple percentage points of all-time highs.
Sure. As you guys know, I'm a big fan of starting with the macro and then working my way down from there. And stepping back and looking from the 30,000 view foot at all of markets, all capital markets, and just the bigger picture, I think the trends that have been in place for the last few years remain perfectly intact, meaning stocks, U.S. stocks specifically, still remain the strongest game in town, number one. Number two, commodities, for the most part, are still stuck in a multi-year bear market. And number three, currencies aren't really moving with massive force, but we're beginning, and this is a very important shift because currencies literally touch every aspect of our economy all over the globe, are beginning to show some change in the recent trends or changes of the norm. So you can look at the Canadian dollar, the Aussie dollar, which are both, by the way, heavy commodity-related currencies, have had very strong rallies over the last few months. And it looks to me like they're going to continue to move higher. At the same time, the euro came very close to parity with the U.S. the U.S. dollar a few months ago. And within the last year, it bottomed. It didn't actually touch parity. And confidence, as you know, confidence is the most important, and trust, component of any market, has been restored in the euro. So meaning people a year ago and a year and a half ago thought the euro would dismantle. Now the belief is no, they're not going to not only dismantle, but the ECB is going to stop their easy money at some point in the near future, which is QE, and then normalize rates again. So that more or less the concept of the euro disappearing or dismantling is pretty much off the table, and that's caused a massive rally in the euro this year.
Let's talk about the Canadian dollar here for a second. I hope Dennis is listening. I mean, that usually you talk about being a commodity driven currency. Well, oil, right? A big part of that is oil, and oil really hasn't moved up that much. I mean, is it a growing economy over there, or is this thing maybe, giving us a look to maybe there's a big move coming in the oil patch?
So it could be two things. Number one, the big move with the Canadian dollar has been the Bank of Canada deciding to raise rates.
Mm-hmm.
And as you know, if you look at currencies, they're very much predicated, or the move in currencies is dependent on what their central bank does. And the Canadian dollar had been falling hard, by the way, in sync with oil prices. Oil prices stabilized over the last year and a half. They stopped going down. Remember, the first quarter of 16, oil was flirting with $25 a barrel. It's now near 50 or in the mid 40s. So the fact that oil's prices have stopped going down in and of itself is bullish for the Canadian, for the Aussie, and for other markets as well, and actually for the stock market in the U.S. as well. Now, when you had the Bank of Canada, which is like their Fed, decide to raise rates earlier this year, that in of itself was a big boost of confidence and was not expected because oil prices haven't been moving higher, for lack of a better explanation. And the fact that the Bank of Canada began raising rates to suggest that the Canadian dollar was undervalued, and you saw a lot of money flood into the Canadian dollar.
All right, looking at the crude oil market here, I think if I read one more article telling me about the value in some of these drillers and oil stocks, I don't know what I'm going to do here. ExxonMobil, well below the $80 level here. I mean, in a nutshell, crude has been in a trading range between 40 and 50. If you look over since it came off that low in 2016, man, most of that range has been even tighter, maybe 42, 43 to 50. Any time of long-term pattern, the long-term move anticipated here in the crude oil market?
Sure. So, I agree with you. If you read another article about that's the demise of what, you got to put all that stuff where it belongs. I'll leave it at that. But with respect to oil itself, if you look at crude today specifically, even RBOB gasoline or any of these other markets that are in the energy complex, the futures I'm talking about this morning with Hurricane Harvey, barreling into Houston, they're barely moving. Crude's actually down. So for me, that tells me that you have a situation where you have ample supply, even though OPEC is trying to cut supply or, curb supply, but you've got ample supply coupled with the other side of the equation is lackluster demand. Remember, commodity prices are a function, or Economics 101 tells us that commodity prices are a function of two simple things: so the ratio between supply and demand. So when all things being equal in a market like crude, which is flooded with supply, fracking and overseas, and people even in OPEC that cheat, et cetera, then you look at the demand side of the equation. The global economy is barely growing. That's a recipe for lower prices, and that's why commodities across the board, mind you, have been getting slaughtered over the last several years. You have ample supply, you have lackluster demand, and you're in a bear market.
And you have artificial intelligence, so you just have that lowering the cost, right, of production, and it just bringing all the prices down. Let's look at FANG here for a second, and that's been a major.
Wait, sorry, Joel. Let me interject for a second, just to be clear. In the commodity complex, the two areas that I do like, that I believe are going
sure.
Are specifically gold, silver, and then copper. So basically, the metals. If you look at the metal space, to me, they are extremely undervalued at this juncture, especially when you compare it to stocks, which are overvalued or getting to that overvalued stage. So I believe a lot of money will rotate out of the stock market and into metals, and we're already beginning to see that. The Wall Street Journal had a lead article on WSJ.com last week showing that gold this year is outperforming the S&P. So I definitely want to say that even though other commodity areas are bearish, I'm beginning to see early uptrends forming, and that could be very bullish, especially if you're able to get in early. And when you couple that with the fact what we're seeing in the currency space, that could lead to much higher prices.
All right, Adam, here's the tough question for you. You're talking about the currency space and gold. What about the new gold? Bitcoin. Tell us how that fits in. Come on, 778 on the GBTC. I got one buddy that's been begging me to buy this Bitcoin. I don't know, since 350, 400. I haven't listened to him. limited supply of this. Where is Bitcoin in your portfolio?
So I don't have any Bitcoin in my portfolio. I had the same situation. I've got a few buddies that are just banging on the table and saying, buy, buy, buy. The problem I have with Bitcoin, if you read even literally today in the journal, you've got somebody that is a cyber thief that held up another kind of cryptocurrency, a few owners, and they stole $225 million of cryptocurrency from them. The problem for me, and this is not to say Bitcoin's not moving higher or it's not the future or whatever you want to believe in it, it reminds me of a textbook example of an overhyped bubble. And if you look at any bubble that's formed in history, in any market, whether it's a tulip bubble in Holland, or you look at the real estate bubble 10 years ago, the dot-com bubble back in 99, 2000, it's a classic stages of basic human psychology run amok. And if you look at all the bubbles, yes, the asset classes change, but the one constant, which is more or less what I base my business on, by the way, Joel, as you know, with psychological analysis, the one constant that never changes is fear and greed. So if you take out the actual name of the asset that you have the bubble in, and you just look at the underlying dynamic, fear and greed take over. And in this case, you've got greed taking over until it's a game of musical chairs. Once the music stops, the last person buying Bitcoin is going to get slammed. And we saw already over the last few years, Bitcoin fall 20% in a day several times. So for my portfolio, I do not like to invest in an asset that literally could fall 20% in a day, and has done it multiple times.
Yeah, I'm with you on that one. And also the procedure for buying and selling and wallet and emails and stuff. I mean, I'll let you know when I buy at them, and then you can turn around and short it.
I love it.
Just go back to the gold here. Are you looking at the bullion, or would you put your toe in something like Newmont Mining, where you get a little bit of a dividend, or you're not going to mess with the miners, just going with the bullion?
No, both. I mean, it depends on how you want to allocate your portfolio. But For me, every investor at this juncture should have exposure to metals in some capacity. Copper specifically is the strongest metal out there right now. And if you look at gold and silver is very strong. And silver historically, let's just talk numbers. Back in 2011, silver was an all-time high of $50, right? Gold was all-time high just under 2,000. Right now, silver is trading near 17, right?
Yep.
So you ask yourself, the S&P 500, and you look at silver. The last 4 or 5 years, silver's been going down. Silver's currently at 17. If it just gets halfway to where it was back in 2011, which was just a few years ago, it's going to more than double from here. What are the odds of the S&P 500 doubling again from here?
100%.
So for me, I much rather own an undervalued asset that no one's talking about than jump into everything, that everyone else is talking about. Now, I'm still long stocks, don't get me wrong. And I think that the stock market now is setting up another bullish early entry point with the 3 weeks, last 3 or 4 weeks, you got a nice little downward trend line forming. And if it breaks above that, we're going higher. This pullback is only a few percentage points off all-time highs. So to me, this looks like another healthy, orderly pullback in the stock market. I don't think this is the top of the stock market in any capacity. All I'm just saying from an allocation standpoint is I personally tell my clients, and this is not advice for any specific person listening, it's just what I tell my clients, is to have some exposure to metals, because on an overvalued, undervalued evaluation case, is a very strong, compelling case to allocate a portion of your portfolio to metals at this juncture.
All right, two quick things before we let you go. First, end of the month cycles here. We are August 28th here coming up at the end of the month. We got a few more days just in your years in the markets, observations, year-end or month-end movements in stock prices.
Yeah, normally you see there's what's called window dressing, right? And legally, window dressing doesn't occur. However, you have a situation where it happens more often than not. And now there's no evidence that it happens. And those of you that aren't familiar, window dressing is just a term that, big portfolio managers get paid based on end of month performance and end of quarter performance and end of year. So towards the end of month, end of quarter, end of year, there tends to be a slight upward bias. Not always, but that's what the term window dressing comes from. So more often than not, you see a nice little bump towards the end of the month. And then in a strong market, the bump continues. In a weak market, you see a sell-off at the beginning of the next month.
All right. Thank you for wrapping that up. And then just real quick comments on the biotech sector here. The big move today, Kite Pharma getting taken over by Gilead. I mean, it's a tough sector to invest in, based on valuations. You can catch things like this, drug trials. Do you have any sleepy biotech stocks, lower cap biotech stocks for us to take a look at, or comments on the overall sector?
Sure. The overall sector was very strong from 2009 all the way up to 2015. And then Valiant Pharmaceuticals, VRX as a symbol, was a poster child of biotechs imploding. And by the way, if you look at 2015, the summer of 2015, July specifically, it looks exactly like Bitcoin now. And I believe I was on your show, and I was telling people, be careful. Biotechs have had a massive move higher. They're going to correct. It's a matter of when, not if. And that's exactly what happened. And now you're in a 2-year, very steep correction. If you look at the IBB, is the ETF that tracks all of biotechs as a group, right, or a sector. Now you're trying to bottom. Well, you really, about a year ago, you tried the bottom, and now you're moving up the right side of the base from the technicians out there. So for me, I'm bullish on biotechs. I think a lot of that excess value has been stripped away. Specifically, Kite Pharmaceuticals has been a leader in our stock. We have, a stock market portfolio, findleadingstocks.com. And we've done very, very well with Kite, even though they don't have any sales and don't have any revenues. When you study the fundamentals, they've done very well. And more importantly, they've been a leading stock for a long time. So we've owned them on and off. But other biotechs to get in on, I would definitely suggest taking a look at this week's report, because we've got 3 or 4 of them in there. And I'll leave it at that. So there's definitely some very strong action in the biotech sector.
Adam Sarhan, founder and CEO of Sarhan Capital and 50 Park Capital. Thanks a lot, Adam. Always great to get a macro and micro outlook on the markets. We'll be talking to you again real soon.
My pleasure. Thank you.
851, the S&P futures continue to chug higher, up 450 at 2447 even. Looks like we could have an opening into the highs of the session. Not a lot to lean on, folks, until you get up into that lower 2454 handle. Let's call 2454 even. Your major resistance, 5475 was the high from last week, but only a few prints up there. So 7 points away from major resistance. Dennis, 852. We'll bring you back in. Any changes here? Kind of quiet, just kind of a creeper of a rally here in the S&P futures.
Yeah, you are seeing those stocks that I think was Spinner was mentioning in the chat there, AIG, but I'm seeing Travelers Group. Somebody just hit it at 122.73. That seems overdone. That's down 3%. I'm not sure we're going to see it fall that much, but MetLife is down 2% here now. So that's selling, and the insurance is continuing there off of the hurricane. So something to keep in mind if you are trading any of those stocks there. I'm just looking here really, out of trends. Biotech's going to be strong. We are seeing Home Depot lows. So you got 2 major catalysts here this morning. You got the merger there with Kite Pharma. It's going to lift the biotechs, at least the smaller ones. And you got the hurricane effect. And you're going to see some stocks get hit on that. Obviously, some of those insurance stocks we just talked about. Some stocks are benefiting, like the Home Depots and Lowe's. And I'm sure there's some other ones we're not thinking of here either. Lumber Liquidators, for instance, it's up 3% here this morning, too. You want to talk about a comeback. What about that LL? This stock has been on the comeback trail. I mean, everybody hated this after formaldehyde. Everybody was done with it. I know you can say, oh, well, it's 120, it's 37. It really hasn't come back that much. But holy cow, it's come back from those lows. I mean, we were looking at this stock at $10 a year ago. It's $37 here now, 38 this morning.
Read somewhere, I don't know if it was Barron's over the weekend, about, Amazon stocks, Amazon proof stocks. And, it's kind of hard to get drones to deliver your lumber, right? It's something that you need, big products. And that was just been in a great run. I haven't heard much from Whitney Tilson at all, but I can remember me and Brandon playing, and I remember I go farther out on this. I think I had like 18 calls or something like that. This was back in April.
The Lumber Liquidator?
Yeah, and I'm like, okay, I'm holding on to this and I'll roll it and do it, and never did. And then lo and behold, you're getting back up to the gap area that it had when, Whitney knocked it down with his bearish thesis. I think if you do some research on that, I think when all the dust settled, I think they paid like $3, $4, $5 million in fines, and it was kind of moved on. But
didn't seem like that much when you consider how much the stock got hit.
Right. All right.
I mean, it was a confidence issue too. I think, obviously maybe now people have forgotten about that issue and they're shopping at lumber liquidators again. So it's over it. I mean, CMG might have, got over their confidence issue as well if they wouldn't have had another issue. So, that's, when you have it happen multiple times, that's the issue there for CMG, still trying to build their confidence. Did get $300 that I was talking about. It's bounced since then here.
What do you think now, Dennis? What do you think?
No, I'm no call on it at this point. I was calling if we could to go under 300 has. I still think that they could lower guidance this quarter coming up. So I still don't want any part of this thing long. There's not even like a speculative overnight long for me, because that would just be my luck. I go CMG, hold it overnight, and that's the day it comes out with the lower guidance. So CMG, I don't want any part of it long, but I'm not shorting it down here either. I think it's getting a little lift. I think it shook a few people up below 300. A lot of times what you'll see is a stock go through a key psychological level and then lift back up through it. So it gets down there, it shakes out everybody who had the stops on the low enough. You can call that capitulation. Everybody just gets the hell out. And that's what we maybe saw a couple of days ago when the stock went down to 296. Now we look at it, and obviously it's lifted up a little bit here in the last few days. Downtrend is still very much intact, still not your friend here. Could you get a short squeeze on this thing? Maybe. I just think there's still a major confidence issue at Chipotle, so I want no part of it.
And how you look for catalysts, and we talk about that a lot in a stock. When that stock got down under $300, August 24th, Will Slabaugh from Stevens and Company upgraded the stock from underweight to equal weight, and that got it going. That's all. And, after 1, 2, 3, 4, 5, 6, 7, 8 down days in a row, you get a little bit of a catalyst. You get a well under. I mean, if you use at 300 as a target and it goes to 296 and you're upset about that, well, then shame on you, right? Because you got your target. They went $4 through it. Boom. Now you're on the rebound. So keep an eye. Let's see, CMG. I keep an eye on the weekly high here. There is a lot of air in this, and I mean, as long as they don't have any more bad news, we got some tops here. Last week's high was way up at, not way up, 312.92. We made that on Friday. See if we can take that out. Only a couple bucks away. Got some air up to the 318 area. August 18th high, 317.95. Dennis, any more imbalances? Not much.
Couple stocks coming from the chat here. Chef wants to know about PPC, Pilgrim's Pride. Have not looked at this one in a while. It's been coming back too. This thing they hit all the way down in July. You can see that one day where they kind of capitulated down to $20, and it's been straight up ever since. It's funny, you get that one reversal. We often have Scott Redler on there. He has the Red Dog reversal. Reversals are violent, and sometimes when you can catch those things, and you catch, this is going to be a reversal day, and you just go with the flow. And if it's a reversal trend and you catch it at the bottom, I mean, here you are. This has been straight up here for the last month and a half, from $20 almost got up to $30. Big move here now. So now if you're coming in here now, yes, the uptrend, yes, you're still going with the trend. The trend is still very much intact here, but I feel like it's lofty and you're late maybe in the game here. So obviously, if you're buying this thing a month ago in the lower 20s, there's people maybe ringing in the register in the higher 20s. And not only that, if you look at it, put a double top in at 29.11 and 29.16. So that makes me a little bit concerned as well. So it looks toppy to me around $29. I know it's had a pretty good run here, so congratulations to whoever was long at it. I think that run is looking a little bit tired.
That's their chicken, right? Pilgrim's Pride.
What are they, Spencer? Go look this one up. PPC.
I'm pretty sure they're chicken. What I want to see for this one, Chef, is you want to get this thing, you want to get it back over 29, close over 29, and just keep on going. You have the couple highs in the same area. If it was long, definitely would be moving a stop up. I'm not sure what your entry point is, but any kind of retracement, basically a 9-point move, could take you back to the $24.50, $25 area. So best you can hope for, I think, here is just a couple days of consolidation, not really going lower, and then bust through that move through 29 and a close above 29 as well.
They are chicken.
I knew they were chicken.
Yep. You know everything, don't you, Joel?
Yeah, just about. All right. S&P futures trading at the highs of the session. I mean, on the charts, there's room up to the highs from last week at 54.75. On the downside, if you come back down to that close right around 42.50, you had a triple close area from Wednesday, Thursday, and Friday. So that's going to be your early support. and that coincides with mid-range on the day. So we'll let you go, Dennis and Spencer, wrap up today's show. Give us a preview. What's on Tuesday's stock?
Yeah, and real quick, I didn't see any notable ratings today. Only one that really caught my eye was Bank of America upgrading Fiat Chrysler to neutral, but really no big rating changes this morning. To speak of, as far as tomorrow's show, well, it is a Tuesday. That means we'll be joined by Nick Shaheen. He's an options expert and the author of Create Income with Option Spreads. Okay, that is our show for the day, folks. Hope everyone has had a good morning so far. Hope you have a good rest of your day. Have a good Monday. We'll be back with you folks on Tuesday for Nick Shaheen. Don't forget about the Benzinga FinTech Summit. Go to bzsummit.com to learn more. That is our event coming up just about a month away. Actually, I think it is exactly a month away. September 28th. In San Francisco. Again, bzsummit.com. And to get a free 2-week trial of Benzinga's real-time news service, Benzinga Pro, go to pro.benzinga.com. So that's it for us. Have a good rest of your Monday. We'll be back with you folks on Tuesday.